Hello guys, this is Trader Sabran here. Today I want to be sharing with you the ultimate guide to Forex market trend. If you are struggling to identify market trend or trading it or understanding the component that actually formulate a trend, this video is for you. Listen, if you're a beginner, you're just starting out on trading and you don't understand how to trade with the trend. Have you heard that saying, trading with the trend? That's what I want to teach you today on this video. So I want you to stick to the end, ensure you like, subscribe, and share this video to as many people you know that want to learn how to trade with the trend, because that's what I trade. All my strategies that I've been trading so far are based on trend market. I trade with the trend, and like they say, the trend is your friend. So today I want you to sit back and watch as I narrate every step of trading the trend with you. Now, first of all, I'm going to be using the chart. I'm going to be using a slide. I'm going to be using all components to help me communicate what I have to share with you today. So be ready, take down some notes. It's going to help you. So first of all, what is a trend? Let's talk about the theory, because a lot of times when we look at the chart, we say, oh, where are we buying from? What should we be looking to trade? What pair should we trade? It doesn't matter what pair, it doesn't matter what commodity, it doesn't matter what indices or whatever you're trading in the market. As long as you understand this simple concept of trend market or trend trading, is going to help you a great deal. So first of all, let's talk about trend. What is trend? What is a forex market trend? What are they? So what are forex market trend? A market trend is the general direction in which a currency pair value moves over a particular period. There are three main types of trend that you need to be concerned about. The uptrend, which we call the bullish market. Okay, uptrend is bullish, price are increasing over time. Then downtrend is bearish, price are decreasing over time. Then we have what we call the sideways market, which is the horizontal trend, price moving within a specific range with no clear upward or downward direction. Now the question is, what does that mean? How do I make that understand? How do I make that clear to you? Let's look at the chart for a moment. First, you can see this is a chart. Now I'm on the weekly time frame. I just told you the three types of trend. Number one, we have the uptrend where price move up. You see, as you can see, this particular movement of price right now that you see from here is called uptrend. This is an uptrend move to the upside. The market is moving up. So this drawing that I just made, this line, give me a sign that the market is moving up on the weekly based on this currency pair. What pair? GDP USD. So the market is moving up. That is an uptrend. You see, that's how you identify an uptrend. But how do you now identify a downtrend? How do you identify a downtrend? The downtrend is the opposite. As you can see, if you move to the left, let me just move it. If you move to the left a little bit, you can see from this angle, from here, where you see this whole drop down here, this is called downtrend. The market scaled downward, and it over the time it scaled downward. That's how you recognize a downtrend. Now the question is, do you trade uptrend when it's downtrend? No. Do you trade downtrend when the market is uptrend? No. So that's why we say trading with the trend is the way to go, is your friend. When you trade with the trend, you are trading accurately in the market. So that's the first thing, understanding what trend is. Then it's also a sideways market. Let me show you an example of a sideways market. For instance, the market is trading on the sides. That means, as you can see this range, did you see this area of the market right now? We have a downtrend. All of a sudden, the market created this area right here, this box. You see, that is a side market on this higher time frame, because on this higher time frame, the market is trending. Sorry guys, the market is trending sideways. This is sideways market, as you can see it. Now you don't trade sideways market based on sideways market. You trade it with experience, and I'm going to tell you why, because there are so many other things I need to explain to you. So the first thing is to understand that this is how you recognize the trend. Now, let's go back to our drawing board. The next thing you want to talk about is the key component. Now, the key component of Forex trend. How do you recognize the component? What are the things that makes up the trend? First of all, currency pairs. You're talking about the trends are based on relative values of two currency pairs. So, for instance, you're trading Euro USD or GDP USD. So, what is the trend? The trend is always the movement of one currency related to the other. So, either GDP is pushing up or is trending up. That means the price of GDP or GDP pound is going up than US dollars. So you have a trend. The next thing you want to say is time frames. Time frames. Time frames, you have to determine what time frame you are using to determine the trend. It's so important. A lot of people don't understand this. I need to explain to you. Time frame matters a lot. Time frame matters a lot because when you are trading, you must understand the type of time frame that you are using to identify your trend. So higher time frame, lower time frames, medium time frame, smaller time frame, whatever it is, you have to know what time frame that you're using. That will help you to track down the progress that you're making. So time frame is very important. There are time frame for medium terms, and we have minutes to hour time frame. We have, that's a short-term time frame, minutes to hours. Then medium-term time frame, days to weeks. Long-term time frame, months to years. So long-term, when we say long-term, we're looking at bigger time frames, longer times that you're going to wait for trade to accumulate and trend and create opportunity. Very important. Now, the trends depend on the time frame you are observing. Mark that word. The trend strength determine on the time frame that you're observing. So very important. Now, duration. Trend duration matters a lot. We have short-term movement, doesn't necessarily indicate a long-term trend or long-term movement. And also we have a long-lasting trend, which will take like weeks or months. We also have trends that are great, that will have lower time, lower schedule of time. I'm dealing with types of primary types of trend now. So when you look at types of trend, then you'll be able to understand. First of all, go back to this. Understand that there are short terms, there are long terms. So let's identify that within the chart. First of all, you want to know what are long term, what are short term. So first, I will show you. Let me erase this and also give you a tip here. So first, we'll go to the monthly time frame. Okay, this is monthly time frame trend. Based on time frame, this is downtrend. So if we look at the monthly time frame, we are saying that the monthly time frame, the market is trending down. So at this moment, we will be looking at, oh, how should we trade looking at the market on the monthly time frame? Everyone should be looking to sell the market. So that is how you see it from time frame. But if you go to the weekly, you also notice that the weekly is also downtrend. On the weekly, we are downtrend. You can see the market is creating higher highs like this. This is how you market. Now, I have a video I have designed, I've done. It's called Market Structure on my YouTube channel. So if you're listening to me now, ensure you write that note down. Take that note down to know where to go to. On our playlist, you will find Market Structure. I did a video about a year ago. You'll find it there on market structure, how to trade market structure. So you will see it is very bold on the chat on our playlist. So you need to trade. You need to learn how to trade market structure. Very important. Time will not permit me to talk about that on this, but through market structure, you can understand the movement of the market, the trend of the market. So this is exactly how it looks like on the weekly. Now, if you go to the daily, it's probably not going to be the same. All right, it's probably not going to be the same. As you can see on the daily, the market is trending up. So based on direction now, we are not looking up right now. Currently, the market is going up on the daily. So what's going on? Because of the time frame. When you switch time frames, you will see observation of such. So just like that. As you go lower and lower, you will see that the trend is changing. For instance, on the 4-hour time frame right now, we are moving from uptrend and inversely experiencing a downtrend coming. The downtrend is coming now on the 4-hour time frame. We can now see that the market is actually trending downward right now on the 4-hour time frame. Did you see that? So each time frame will help you to understand what trend you should be looking at, and that's what also give you a directional bias on what to trade depending on the time frame that you're looking at. Very important. Just like that, as you go lower and lower, as you can see, this is 1-hour time frame and this is in hours. So we are done with the hours now. If you go lower than that, you are not in the minutes. So you can see that even in the minutes time frame, we are downtrend. On the 30 minutes, 15 minutes, we are downtrend. So that's why GU right now is struggling to push up. Why? Because the market is on the short term downtrend, is selling. So I will explain that detail on the market structure if you go watch the video. Now, let's come back to our screen. The next thing you want to pay attention to is the type of Forex market trend. Types of Forex market trend. So we have the primary trend, which is long-term movement that typically lasts for several months. This is for big guys. We're talking about those who trade for longer term, for many years, keep holding a position for years. Okay. Then we have the secondary trend, short term. This is a shorter movement within a primary trend, lasting from weeks to a few months. Again, this is for other big guys like the hedge funds and all of these guys. So they will leave the trade for several months. So they can get into a trade today and then they can leave the trade for first month, second month, 6 months, or even up to 7 months, and before they close their trade. That is for those kind of long position trading people. And also we have minor trends, the short-term movement that lasts from days to weeks, and that is where we trade. That is where you trade as a day trader, as a swing trader. That is where we focus on. We focus on trading this short-term movement of the trend. So short-term movement of the trend means that the market moves. We look at the day, the daytime, the daily time frame. We look at the weekly time frame, and then that's the highest we go. And then we come back to the 4-hour time frame, and then we move around within the weekly, the 4-hour and the minutes time frame, which is 1 hour, 30 minutes, and then we'll be able to get our goal on what we are trading at that moment. This is so important as a trader for you to understand, because if you understand this, it's easy for you to understand trade the trend. Now, the next thing is, how do you do this? What are the tools do you need to trade the trend? What are the tools do you need? What tools do you need to mark this trend? You see what I just done a while ago. I used some tools, and I want to talk about those tools. What are the tools that you need to trade with the trend? Now, the first thing you want to think about is technical analysis. When it comes to using tools, we have to talk about tools that is technically based in the market that you want to use. We're talking about technical analysis tools. So those are the tools you want to first of all talk about. So what are these? We're talking about moving average. You see, you're looking at moving average. You're looking at simple moving average and exponential moving average majorly. So simple moving average, exponential moving average, and then we have trend lines. And these are the tools that are used to identify market trends. And then relative strength index, which is RSI, which is commonly used, but that is actually helpful to determine overbought and oversold condition on the market. And also, these are time frame based. Never forget, they are time frame based. And the last one is Fibonacci retracement. Is one of my best tools that I love to use, Fibonacci retracement. So these are the tools, and I will give you an idea of how this tool is and how they work in a minute. But before we do that, I want you to know that you can hit the like button, you can hit the subscribe button, hit the share button, because of this content is huge and we have so much to talk about. Now, let me show you what I've just done. You see this? Drawing a line. This is called trend line. You see, trend line is the intersection of 2 points, which is the troughs and the peaks of a trend market, of a moving market, of a price. So for instance, this is the peak of this price. Okay, we have that price came back and touched this level, and then came up a little bit and touched this level, you see, and then rally up and touch that level. So I did a video on trend line, how to trade trend line. Check my content, my YouTube channel. You will see a video of when I talk about trading the trend line, how to use trend line to trade and counter trend line. That will help you. Very important. You understand that. So that's trend line. The next thing you want to use is moving average. So all you need to do is to go to whatever time frame you are on. Maybe for instance, now we use the daily. How do we know how do we know what trend we are right now on the daily? Even without market structure, you can definitely use a moving average. So we call for moving average, and on the indicator section, you use a moving average. Now, the moving average you can use, there are different types. There are exponential moving average. I talked about that just now with their smooth moving average, their simple moving average, their linear moving average. But I will encourage you to use exponential moving average. So go for exponential, as you can see, moving average exponential, because it's faster, it correspond to time quicker, and you'll be able to use that for your advantage. Now look at that. Then we can change the settings. So with it now, the length that normally goes with it, the highest you can go for at the moment, which time will not permit me to explain, is the 200 moving average. So you can go with the 200 moving average, go with the 50 moving average. You can go with 34 moving average. I normally use 34 moving average because I'm a day trader. So let's say we go with 34 moving average as a day trader. Then I can increase, because this is exponential moving average, so I can increase the width so that I can see it very bold and leave the color as blue as it is. So right now on the daily, we are bullish. The market is bullish, as you can see with the moving average right there. The market is bullish. The moving average is telling us that the market is bullish. We're looking up. We're looking up. We should be looking for more buys in the market. Although the market may be pulling back, this is a retracement. As you can see, current market right now is retracing, but the market is overall bullish. So if we move to the weekly, you can also see that the weekly confirming that we are bullish. Even with the market structure, we are bullish on the weekly on GDP USD. Now, what about the monthly? The monthly also shows us that we are bullish. The previous months are bullish candles, and you can see price trading above the 34 moving average that I'm using. So why do I use 34? Like I said, as a day trader, I don't like to use a longer moving average. I use a shorter moving average so I can be able to catch the short-term trend in the market. So if you go to 1 hour, for instance, as a time frame, you will notice I told you earlier that 1 hour time frame is beginning to act bearish. As you can see, that's a confirmation that the 1 hour is bearish. If you go to the 4 hour, you will notice also that the 4 hour has begun to run bearish. Price is trading below the moving average right now, so it is bearish market. So you can go also to check the 30 minutes, the same thing, is struggling to stay bullish, bearish. I can see price is trading around there. It's trying to now currently price is below the moving average. So all of this is what you learn when you are using this tool. It's so important to understand how to use the right tool. So that is for the moving average. Let's go back to the screen and show you other tools that you need to use. Then we talked about trend line. I've already talked about trend line. Then relative strength index. Now all you need to do is to have the relative strength index insert on your chart. I don't normally use it. I know some people use it for overbought, oversold. You can always watch YouTube videos on that. I think I've talked about that on my channel. But let me use the Fibonacci to express this. Now let's look at the Fibonacci. First, the Fibonacci is so important to me. I use it every time. Now let's go to the week, to the daily, for instance. What do we use the Fibonacci for? To determine a potential reversal after a major trend has been examined. Like as you can see, this is a major trend to the upside on the daily. Question: when should we be expecting a continuation? This is a retracement. When should we be expecting a continuation to the upside? So if I put my fib here, take the fib and stretch it up here, Fibonacci retracement, you see that price is retracing. Retracing to 38 will be a confirmation of accurate retracement, a real confirmed retracement of the trend. So when price get to 38, I will be, if I'm selling, I'll be looking to take my TP at 38 on the lower time frame. And then we see that the moving average is very close to that area as well. Worst case scenario, price could drop massively to this area of 50, or even drop to 60 minus 61. I mean, that's 0.61% before rallying up. This is how you use this to determine the end of a trend and the continuation of that trend. There's more to this, which I'm going to teach you, but I just wanted to give you an understanding, the basic understanding of how to use it. This is an ultimate guide for how to trade the trend using these tools that I'm showing you. Now, let's look at another tool. Now, when it comes to tools to identify Forex, you have to also consider fundamental analysis. Now, this is not technical. We're done with the technical. You have to consider fundamental analysis. You have to use fundamentals to build the level of confidence in the market, to know what to do by trading in trends. Now, fundamental analysis is the approach that focuses on macroeconomic factors like interest rates, inflation, GDP, political stability that affect the values of a currency. So the key indicator to watch for is the central bank policy, which normally comes out like in interest rate changes that they come up every month. And also we have the European Central Bank also, that we have the Japanese Central Bank also, the Japan Central Bank that comes up, they change their interest rate. So interest rate is the major driver of a trend in the fundamental section when it comes to economic factor. And also we have to look at what is going on in the country, geopolitical events, election that is coming up in the United States right now, and then all of this war that is going on, conflict that is going on in different nations of the world. All of this will give you a guide based on their currency that dominate that nation, and they need to trend in that direction, which you must pay attention to. And all of those things comes as an impact. Now, there's a tool I normally use for this, and that tool is, let me show you, is this tool right here. I call it the Edge Finder, founded by one of my mentor, Frank. And listen, you can get this tool easily. It will help you to understand fundamental analysis. There's so much to talk about with this tool. It's a powerful tool. Although it's expensive, but it's a powerful tool. It consists of the COT data position of the big guys in the market, the non-commercial traders, and we have the smart money concept, smart money traders, what they are looking at. And we're looking at also the sentimental and economic growth. We're talking about GDP growth, interest rates. All of these things are being released in the market, and it also shows us what the economic calendar is, everything you need to know about, economic, what do you call it, fundamental analysis. They are all here. Everything is here. There's so much to talk about. This is a massive tool. I won't be able to explain everything to you. You choose the asset you want, and then to give you all of the details. That tool is a beast. Trust me. I love it. Okay, now another thing you want to pay attention to when it comes to fundamental analysis, I also is geopolitical events, the wars that are going on. So all of this information will be given to you on that. Now, the next thing is sentimental analysis. I already talked about the COT data. Let me talk about sentimental analysis. This is very important because this sentimental analysis is what gauge the emotion of the market. Like the tools that we use, this particular tool will help you to know that. Let me show you something about that quickly. Now, if you go here, I come to sentimental analysis. You see sentiment. Then I come to retail positioning, for instance. You will notice what's going on here. This is sentimental analysis of all these pairs listed in the market. Let's just take what we normally trade, GDP USD. You see, the market is telling us that GDP USD is obviously 33% against 67%. That means looking at the overall movement of the market is bullish. So the market, you could go up anytime. So those who are selling GDP USD, be careful. That's what it's telling you. So sentimentally, the market will be on the favor of the minority instead of the majority, sentimentally speaking. So you need to study about sentimental analysis. Now, there's so much to talk about, but you know what? This video, I don't want it to keep it too long. So the first thing is to understand that I have taught you today how to use these two to help you build a trending a trending trade for yourself every week, every month. And I guarantee you this: if you follow this trending teaching that I've taught you in the market, you will be able to get out of trade easily, pick the trend and trade as long as you want, because that's what we do. We trade with the trend. And when you see me do my analysis, I always tell you that I'm looking for the market trend. I'm waiting for the next move. So that's what I want to do every time when I do content like this. I want to trade on the trend. Anytime I'm on the market, I'm looking at trading the trend. So that's what I do. All right, guys, you see, I don't want the video to be too long. You see me trying to round it up because a lot of things to talk about. I'll see you in the next one. Until then, listen, keep smashing the market and hit the like, subscribe, and share this video. It's a long one, but sit down and pay attention to what I've taught you and implement it on your chart. You will understand it. So you know where to find me. My link is in the description of this video. You can contact me, reach me, call me, join my Telegram group, whatever, take my course, whatever you want to do. The links are all there. Thank you, guys. I appreciate you all, and I'll see you next week or in the next video soon dropping. Thank you so much.